Welcome to the Group 13 analysis of Walmart and Ameresco. We are analysts doing third-party research on the potential acquisition of Ameresco from retail giant Walmart. Walmart, everyone knows, is the multi-billion-dollar global retailer. Ameresco operates in the renewable energy sector and energy infrastructure, particularly wind and solar. Our analysis today will cover the following. Ameresco valuation approach and estimate, the sources of value for Walmart, the sources of risk for Walmart, the financial options for Walmart for this acquisition, the individual investment analysis of a comparable $50,000 investment, and then we will wrap up with our conclusion and summary. The valuation, we use three approaches: discounted free cash flow, the next 12 months EBITDA multiple approach, and the market capitalization data plus equity premium. Highlighting the DCF method on this slide. We point out the DCF method is difficult for companies with negative free cash flow. Some of the assumptions on the DCF model were 8.5% discount rate, which we use throughout this as industry standard on data that we attained from consultant Grant Thornton, a 9% growth rate in years 1 through 5, which is a projection from the analysts, and a 7% growth rate from year 5 onwards. A 30% takeover premium. This is the median of Bloomberg data that showed a range between 10 and 50%. The 30% is also used because of the positive MPV premiums on the synergies, which we will discuss shortly. Looking at this slide, using DCF, we come up with a company value of $774 million, as you can see on this slide. We also come up with a share price of 28 cents, which you can see towards the bottom under 2018. And this is wildly lower than the share price of $17 where Ameresco is trading. And here you note that in using DCF, we have to make large assumptions. And this includes zero CapEx in 2023. And this is why you see at the top the change in free cash flow from negative $24.5 million to plus $59.6 million. We also modeled the company using a 30% market premium to the market cap. And as you see in line 3 here, it has a value of $472 million. We also use the market multiple EBITDA model. And this is our proposed valuation because this is the most acceptable method used in the industry for growth companies. So using this, we take 15.9 times the EBITDA of $83.7 million to arrive at $1.33 billion as the proposed company value. So we're going to touch briefly on the sources of value for Walmart. Key here is that the acquisition will help Walmart achieve its sustainability goals outlined in paragraph 1. These sustainability goals are 1, to be supplied 100% by renewable energy, to create zero waste, and to sell products that sustain the people and environment. Currently, Walmart is operating at roughly 26% of its power for renewable energies in 2017. Buying Ameresco will also reduce Walmart's electricity bill with $2.7 billion in net synergies that we found in the upcoming section. There's also a lot of positive media attention that can be derived from being an early mover and being seen as a green company and marketing large-scale alternate energy products to customers. Looking at synergies, we just want to touch on this because the calculations are rather complex and we obviously have time constraints. So with the synergy calculations, the key points are: number 1, producing energy, renewable energy on the premise significantly reduces the cost of electricity for Walmart. The net present value of the synergies of savings starting in year 2023 after the completion of the installation is roughly $2.7 billion. Some of the sources of risk for Walmart include a loss of vision, a loss of market share, and that's for Ameresco, regulatory approval, will it go through, a policy shift. When you think about a policy shift, many projects are tied to federal grants, which can change with the new administration, and no direct experience in the service industry. So this is key. Is Walmart experience with retail, logistics, transportation, and distribution. Walmart does not have experience with alternate energy. Some of the financial options for Walmart with the Ameresco acquisition, we note the pros: significant cost savings, and on the con side, Walmart owns all the financial risk. As an alternate, Walmart could seek long-term power purchase agreements. So Walmart has the financial flexibility and has the scale and could squeeze providers for low prices. But on the con side of long-term power purchase agreements, there's a public perception risk that the giant Walmart is coming in and being able to squeeze providers, which we see as a pro, but also could be a tricky situation for them from a policy perspective. The options of financing for Walmart. So we note that Ameresco would likely see the acquisition as a cap on future growth, and therefore, they would fight the acquisition. We would suspect that Ameresco would not want to be seen as shifting as an in-house power supplier to Walmart. So a strategy to overcome this resistance, one is to use cash versus some or a stock type deal, and to use the higher multiple of the 15.9 EBITDA, which is higher than the 2018 of 15 times, or 15.0 times. With this deal, cash is feasible, so $1.3 billion in cash is needed in Walmart in 2017, at roughly $6.8 billion in cash on its balance sheet. So while cash puts all the deal risk on Walmart, the cash is also seen as a positive signal for Walmart's financial health and strength, and it's also seen as a positive signal to Walmart's going green. So after acquiring Ameresco, is Walmart stock a good investment? So we concluded yes, in that the gain on a $50,000 investment in Walmart exceeds $16,000, or roughly 33% in that period. And with this, we used the Walmart beta, the merged beta of Ameresco and Walmart. And then we also used the forecast of the market returns against that beta, and then looked at the returns and dividend estimates compounding annually. And as you can see, the bulk of the gains of the $16,000 here are in dividends. So the first year dividend 2.17 and growing at roughly 8%. So as a conclusion and summary, so the Ameresco valuation approach and estimate, we used the proposed company value of $1.3 billion, and our preferred method was the 15 times, for the EBITDA multiple approach, and we used 15.9 times. With the sources of value, it's sustainability, cost savings, hedging risk, and there's also the potential growth in an unfamiliar sector. The risk is, there are several risks, and the one that we noted most is that it's an industry that Walmart does not have any experience in yet. The financial options were rather clear, right? There's a clear ability for Walmart to do this deal in cash, given the size of the cash they have on their balance sheet. And the individual investment analysis, post-acquisition, we estimate a 5-year return on Walmart stock of 55%. That concludes our analysis, and now we open for questions.